I would like to start with a quote which is used many times. Is Schuman in the 50s said that Europe will not be made all at once. And this is the case also for the Economic and Monetary Union. It's a process started more than 20 years ago, but step by step we're moving ahead. And so let me focus first on what we have achieved so far. I think this is highlighted in the book, but I would really like to emphasize that in thinking about deepening EMU and completing EMU, we need to also cheer the achievement we have reached so far. And if I think at the lessons we learned during the Euro crisis, we got a lot of improvements in our framework. I mean, this is clearly mentioned in the book. The economic and fiscal framework and governance was really strengthened. If I think about the two-pack, the six-pack, the introduction of the European semester and the macroeconomic imbalance procedure, all these issues are now at review again, but we should really remember these were introduced first more than 10 years ago. Also, new institutions were created. I will mention in a moment my own institution, but it's not just the ESM. The ESRB was created, the three European surveillance agencies, also IC Martin, the European Fiscal Board was created. And of course, the EFSF first and the ESM later. We provided the 300 billion of support in loans to 5 countries, and this really safeguarded the very existence of the Eurozone. And let's say at the end of the Euro crisis, while we were thinking how to improve all the institutions as taken, I was personally involved in the discussion about the reform of the ESM. I will talk about it in a second. The pandemic erupted. And I think we should not forget the rapid and decisive intervention of all European institutions and the member states alike. In a matter of days, we put together a big package of 540 billion financed by the EIB, the Commission with SURE and the ESM with the pandemic crisis support. And in a matter of weeks, the Next Generation EU was created, approved, and put forward. I think these are all signs of increased risk sharing within the EMU and also a clear sign of solidarity. And if I go back to the quote by Schuman, he followed on saying, Europe will not be made all at once, step by step, based on solidarity. I think we have always witnessed this solidarity in what happened so far. Of course, now we are at a particular juncture where we are thinking about how to deepen the monetary union, how to improve it, how to make it genuine, as the title of the book says. And there are several initiatives that, to me, are very important. Actually, we should not forget that also membership have increased. When I joined the ESM, we were 17 members, then Latvia, Lithuania, Croatia now joined at the beginning of the year. Other members will join. So it's an evolving animal, it's not a static one. So going back to what needs to be done to really deepening a monetary union, I would like to focus on two aspects. I mean, the books has several areas where we should really make progress. Isabel, I think, rightly mentioned the economic governance review, the reform of the Stability and Growth Pact. For me, two key elements in the future are the completion of the banking union, and Jean-Pierre mentioned it in his intervention, but also let me focus a bit also on the central fiscal capacity. So first, on the banking union. A lot has been achieved, and one of the lessons of the Euro crisis was to launch the project of the banking union. The first pillar was achieved quite quickly, the single supervisory mechanism. Then the second pillar also was launched to some extent almost completely, the single resolution mechanism. What is missing, if I may, is the backstop, which would come with the ESM treaty ratification. This was already agreed and decided by all members. 19 out of 20 members have already ratified the new treaty. So we need just the last member to ratify the treaty in order to get the backstop operational. From a practical point of view, everything is ready. It's just a legal issue of the treaty ratification. And I think, as we have seen those days, we cannot take it for granted financial stability. Of course, the issues were not in Europe, but in other jurisdictions. But still, completing banking union, adding up what Jean-Pierre mentioned, the proposal of the Commission that should have come up today, plus EDIS, as mentioned by Isabel, I think is of a paramount importance. This would increase what I can label as private risk sharing. So with a complete banking union coupled with the capital market unions, we can really get closer to the US system, where private markets take on the shoulders a lot of risk sharing. And the more we have in the private risk sharing, the less is needed in the public risk sharing, which is also important. And I come to my second point, the central fiscal capacity. This is mentioned in Professor Beck's book. Also, the other colleagues touch upon it. I think we need to clarify what the fiscal capacity is about, because I believe there is a little bit of a mix of purposes. So talking about central fiscal capacity is a pot of money managed at a central level, being it the euro area or the EU, but then what to do with this fiscal capacity. And I think there are several objectives that are now a little bit mixed. One is the provision of support to national investment, especially for digital and green transition. This is what Next Generation is currently doing. Of course, this is a temporary mechanism. We need to see what would happen at the end. The second objective could be the provision of a genuine European public good, which is not yet there, but I think at political level, and Jean-Pierre outlined how important our decisions at political level, which are even beyond the economic sphere. It goes into defense and other issues. And the third point, this is what I would like to focus on as ESM, is the provision of central fiscal capacity for macroeconomic stabilization. So the euro area is hit by shocks, and we have seen many shocks in the past, including the pandemic, the war in Ukraine, the energy shock, and other might come. And I think the central bank is more and more, and rightly so, focusing on monetary policy, tackling inflation. So these kind of shocks need to be tackled by the fiscal side of policies. And of course, the first line of defense is domestic fiscal policy. So the central fiscal capacity should not be an excuse for members not running prudent fiscal policies, bringing now down the debt level and creating fiscal space. But there could be conditions, and we have seen this in the past, where this is not enough. So I think to complete and deepening EMU, we need such a form of central fiscal capacity. Some colleagues at the ESM, a couple of economists from my department, they developed a proposal last year of creating a stability fund, which would be based on loans and not on grants. So we can avoid the discussion about the transfers, which is not politically viable in many members. We can avoid the moral hazard by clearly defining the condition under which this kind of central fiscal capacity is triggered. I don't want to go into the details. The paper is out, and also there has been other publication. And it's not important that ESM is providing this. What is clearly important for the monetary union as such is that also on the fiscal side, we move on with initiative at the central level. And of course, the initiative by the Commission of the recent past, SURE and Next Generation EU, could also represent a blueprint for what we can debate and discuss in the future. Just to conclude in a nutshell, I think in order to make the EMU more resilient and stronger, we need to increase both public and private risk sharing in parallel. So one initiative is not instead of another initiative. Both should move in parallel, and capital market union and banking union on one side, but also central fiscal capacity on the other side. Thanks a lot.